Hello and welcome. I'm Natalie MacDonald and you're watching Sydney Direct, where we look to bring you exclusive insights into Australia's financial markets. Now, something a little bit different this week, I'm actually reporting from Melbourne, Australia. I came down here to have a chat with Chief Market Strategist at IG Markets, Chris Weston. Chris Weston, thank you very much for welcoming us into your offices today.
Pleasure. Great to be here.
Thank you. Okay, now first up, analysts seem to be a little bit divided really in terms of their Aussie stance. Could the central bank be more clear perhaps, do you think, in terms of where it thinks the appropriate level for the currency is?
Well, I think if you go back a couple of years ago, we did actually have the RBA giving explicit levels. We heard Glenn Stevens saying that he liked the currency any between 85 and 90. The problem is that was then, and commodity prices in terms of trade are very different from where they are now, so it's a relative basis. Glenn Stevens, in his narrative in the recent commentary in the RBA meeting, still believes that the Australian dollar is high by historical standards. So he would like to see the Australian dollar low. He didn't give any explicit levels, but what I think you need to look at and focus on within the statement is that he said most of the falls have come against the US dollar. And we know that the US dollar has appreciated against the Australian dollar by about 8% since the beginning of September. But on a more trade-weighted basis, it's probably fallen less. And I think at the same time, on a trade-weighted basis, it's fallen about 4%. And I think what Glenn Stevens is trying to say here is we should focus on a lower Australian dollar, but we need to look at it on a trade-weighted basis. Everyone gets so caught up in the Aussie dollar against the greenback, but we are a global trader, and we need to look at it on a global playing field. So the trade-weighted one is what we look for, and I think if you look at historical norms, go back to the start of the decade, we've still got about 6% to fall before we go below the average of that time. So I think you'd like to see a lower Australian dollar on a trade-weighted basis to see the big falls that we've seen in the terms of trade. Of course, we're big exporters of iron ore and coal, and they've had some big headwinds this year as well. So I think he would like to see it much lower, but he hasn't given explicit levels as such there.
Where then does IG see as being a fair price almost for the Aussie dollar?
Well, I would actually say on a number of different models, if you use swap rates, if you use terms of trade and bits and pieces, if you amalgamate that right now, we're probably at a fair value for where we are right now. Given what we're seeing with the Federal Reserve pushing back a little bit on expectations, if you look at the Fed funds future, for example, for December, last week we saw that collapse. Expectations have really been pushed back for when the Fed are going to move, and that looks probably more like to be September now of next year before the Fed start what they call lift-off as such. The big issue and the anomaly which will create downside in the Australian dollar against things like against the US dollar and certainly against the yen, which we're seeing at the moment, is what happens with volatility. There's a big negative relationship or a negative correlation between the VIX and the Australian dollar against those two currencies there as well. So if we do see a prolonged period of market volatility based on concerns about global growth, then I expect to see Aussie dollar against the greenback and against the yen specifically coming under much more pressure. And there's a little bit of, I suppose, technical selling with people looking at the downtrend that's in place, people looking at retracement levels to sell into. But against the greenback, if we focus on that, because of course that's the one that all our clients seem to trade here in Australia, we're probably around about fair value. For me as a trade, I'd probably be looking to sell into any kind of moves around 88 into maybe even 89, I think would be good value as such, but I think longer term, if I was to take a 12-month view, I see much better downside in Australian dollar against the greenback.
Lastly then, opening months of 2014, the Aussie dollar was one of the top performers amongst the G10 currencies. We've still got a couple of months left of 2014 to go. How do you see it working?
Well, I think we're probably likely to see a range, maybe downside down to 85, depending on the volatility. I believe personally that the expectations around inflation in the US, expectations in Europe have fallen just a little bit too low at the moment, and as a result, I wouldn't be surprised to see a little bit of a calming of volatility. But I do think we're going to sort of stay above this, around this sort of 20% level on the VIX, for example. But so I'd expecting to see a little bit of a range, maybe 85 to the downside, but probably gravitate slowly back up towards that sort of 80, 88, maybe up to 89, where, as I say, I'll be looking to sell into it. So I'll be playing a range of 85, 88, perhaps a little bit higher than that at the moment.
Chris Weston, thank you very much.
Pleasure, thank you.
Thank you, Chris, for your comments. That's all we've got time for right now. But for more currency analysis and markets insight, do stay tuned to Dukascopy TV. Goodbye.